Let me now launch into our panel of discussion on payments and trade in Africa and the Middle East. There was a session on that earlier this morning. Murali Subramanian is the EVP Head Transaction Banking Group at ADCB. That's a bank in Abu Dhabi. Mark Richards is the partner and head of financial services at Actis, and also Patrick Gutman is the group head transaction services group at EcoBank. Guys, thanks very much for joining us. So let's start with the big picture, if we can. First of all, we start with you, Mark. Tell us about the big picture of payments and trade in Africa and the Middle East.
I think the biggest picture is that it's a very nascent world with huge growth potential across it. When Actis, as a private equity investor, started looking at the market, we did some work with McKinsey's. And the key insight was Africa, ex-South Africa, is still a 95% cash society, which puts it as a complete outlier to global comparisons. The same, I think, is largely true in the trade perspective. The trade figures are a fraction of the cross-border trade dynamics that we would find in other parts of the world we operate. So we saw a market which was in transition, that is beginning to take off at considerable pace, but was lacking some of the infrastructure, some of the technical partners that you would find in other parts of the world. If you can combine those partnerships with 1.1 billion people, it's a very, very exciting region, and we think there's enormous growth prospects ahead.
Tell us about some of those prospects, because you are two operators in this region having to grapple with those challenges.
Yeah, Mark's point is spot on, and to add to what Mark just said, the Middle East is not so different either. Middle East is probably further along in terms of other means of payments, other means of value transfer, but cash is still king. And societies set stock by payments monetized and delivered in cash. So the ability to connect to a value transfer network in the rest of the world that transacts gazillions by electronic means is still a big opportunity in this region. And the opportunity comes from reducing cycle times in terms of getting value across to suppliers or buyers, and it also is value in terms of cutting the bureaucracy involved in the paperwork, as well as in the transacting involved in physically banking the cash. So there's huge opportunities, huge synergies. There are, of course, people who make money on handling cash in this region, and that's of course a niche opportunity which will lead to other potential for other forms of revenue. So no matter which way you look at it, there'll be some pools of revenue that'll vanish and some new ones that'll be created. So I think it's an exciting opportunity for banks such as ours to shepherd this change and not be parochial about wanting to protect pools of revenue.
Yeah, I think from our perspective, EcoBank being a Pan-African bank, primarily operating in sub-Saharan Middle Africa, banking has traditionally been very credit-centric, so deposit-taking and lending-driven. And we find that there's a real opportunity when tying in the transaction banking proposition in that, not only, of course, to widen the services and products that you offer to your clients, but it also allows us to capture the full supply chain. So as you know more about the client's operating activities, be it from a collections perspective or the payment needs, it then makes you more comfortable to finance, for example, lower down the chain SMEs and ultimately to the end consumers, be it employees or users of those SME services. So we find there's a real opportunity to use transaction banking to tie that supply chain. It can be a domestic supply chain, not necessarily the big cross-border, but a domestic supply chain we find as a bank is a real strategic opportunity for us.
If I could, sorry, go ahead, Mark.
I think one of the things that goes with that is that these are quite life-changing circumstances within some of the markets we operate. We forget that the payment infrastructure in Sub-Sahara is not as evolved as it would be in Europe or the US or indeed in the Middle East. So the bank branching is not as universal, bank account coverage isn't as universal, even the government systems for benefit payments and so on are not yet in place in a modern electronic form. So one of the things that's really going on within the payments world is this formalization of the economy within these marketplaces, that it's bringing people who are in a cash-based society into the modern financial world for the first time. The technology change that's going with that is enabling the cost to serve to come down dramatically for the banks. So I had a former background in Barclays. Had you looked at sub-Saharan Africa in the 1980s or 90s, the cost to serve the mass market was just impossible, and the cost to serve the SME market was impossible because it was old-fashioned manual transactional banking. With card-based solutions, with electronic solutions, that cost to serve has changed dramatically. But the evolution is going in a slightly different way than that you would find in Europe and the US, because the opportunity to leapfrog is beginning to become a reality in these markets.
Great comment. There's two themes that I think have emerged. The first one is the usage of technology to speed things along and to reduce the cost to serve. The other understated aspect of serving SMEs and the unbanked is really the credit decisioning model, because provision of information is clearly very, very important. Once that information is at hand, how do you use it to bank it? So how do you collect what you're owed? You've gotten a message on your cell phone saying you've just been transferred to $10,000. How do you go to wherever you go to collect it? That's a credit decision most of the times. That's at one end, the unbanked. And then there is, of course, the wider aspect that Patrick alluded to on SME financing, very, very relevant to this market, and it's a market we serve that we know well. SMEs typically tend to get neglected by and large as a segment in terms of bank financing, because banks are most comfortable lending to corporates. It's positive selection in terms of they've already done so well with their balance sheets, so let them do a little bit more with the corporates. But those that really need financial help, the decisioning process is tedious and the denial rates are very high. So there's a need for a differentiated credit process to deal with SMEs, and that is not understood by the mainstream banking community. Now, that's where SME banking needs to be created as a principle by itself.
Just adding to what Mark was saying earlier, I think the other aspect which is quite exciting is that there seems to be a renewed energy and political will to look at regional integration among some of the sub-Saharan countries in certain regions. Take the Francophone West African that have a single central bank, single currency, single stock market. And with that, of course, comes the ability for commercial activities no longer being constrained by the borders, but allowing that to flow more actively. And I think if we look at SADC having a single clearing environment, all of this will also help facilitate intra-Africa trade flows, which traditionally may have been happening, but they were happening through US dollars being cleared through New York and coming back on the continent. Once you have that integration, I think it allows for more fluid intra-Africa commercial activities.
It's not only, I think, the intra-Africa, but within the domestic markets. It's a behavioural change in customers. And I think the other thing that is very, very noticeable, when we started looking at the card-based world in Africa, we did some research and it suggested that the average card usage outside South Africa was less than one card transaction per annum per member of the bank's population. The equivalent statistic in the States was 164 transactions per capita. So you've got something very profound going on, that it is this very basic inclusion and behavioural change, which I think is beginning to speed up the velocity of the economies themselves. So the nice thing about this sort of transactional trade story in the region is it's one of the rare parts of the value chain that's a win-win for everybody. From a government point of view, formalizing the economy, creating payment audit trails, creating card-based models, allows them to formalize the taxation system of an economy. It allows them to pay benefits directly to beneficiaries rather than using a mass subsidy system. And those are very, very transforming effects for government. But interestingly, they're equally good from the consumer at the other end of the spectrum, that they're actually making their lives better, more efficient. And this is the bit, I think, that people underestimate if you look from a global perspective at the regional parts that these events are not only very exciting for those of us who invest in the industry or work in the industry, but they're exciting because they're absolutely life-changing and transformational for people. The trade flow is the same story, that the access to goods and services at lower cost, at more efficient distribution models, is the thing that is changing lives. So we think that that's really how you have to think about this. You have to get beyond the mindset of a major global bank thinking in supply chain finance for multinationals. You have to think about what makes the financial system itself work better. And if you can create open architecture models that everybody uses, that is a real benefit to them, they are more than willing to pay the transaction fees and charges that go with it. And that's where this region is very, very different to many other parts of the world.
Yeah, transaction banking has been likened to a powerful locomotive that needs tracks, that need rails to run on. And sometimes you find in these markets, you've got the locomotive, but you don't have the tracks to run it on. And so to your point, Mark, what you're saying is spot on. I think there needs to be, so we've agreed as a group that transaction banking really represents more of a solution than a challenge to some of these opportunities awaiting us in this region. But how do we get it further? The question is investment, and who invests and where will it come from? There'll have to be investment attractiveness, and the opportunity is there, but how do you parlay it into investment attractiveness is one fascinating question that'll probably be a different debate.
Well, I think, speaking as an investor, creating the ecosystem of payments groups that work behind the banking system, that work in conjunction with government, is actually a very, very good investment opportunity. I speak as a partner in a private equity group. We are not a charity. We do this very much commercially. But we, I think, spotted a vacancy that said, if you looked at the infrastructure of financial services, the plumbing, if you like, its depth wasn't fully developed in the region. And if you can create the plumbers, just in the same way that the picks and shovels guy with the gold rush made all the money, we believe that that's a tremendous investment opportunity. And so we set out to create a trusted partner behind the smaller banks of the entire region, working now with 110 banking groups, precisely to provide some of the technical skills and partnerships that they need to exploit this opportunity. And that's where I think it's an interesting contrast between the bankers of the region all see great benefit from their customer point of view, but they also need to develop a thought process that says, what is our core competence? What are we good at? And where do we need partnerships? One of the exercises I think a lot of European banks went through was to say, actually, we don't need to do everything ourselves. We need partners who are better at it than we are in particular parts of the value chain, and our job is to look after our customers.
Right.
And that's the solution we're trying to provide.
Yeah, if I could get in a comment there, very interesting. Bankers are only as good as their quarter-end budgets allow them to be, and so that's a natural constraint and how creative they can be over a term. But I think that's a fundamental question awaiting an answer from all of us in the industry, and just how do we move the limits forward? How do we set those rails down so we can run the locomotive?
Patrick?
No, I was going to add to what Mark says. I think the infrastructure discussion is a very interesting one. And particularly if we tie it, for example, to mobile banking, which a lot of banks talk about and a lot of people in general talk about. But I think a lot of the focus currently is on the product or the solution. But I think the real value of that is the underlying infrastructure that comes out of that, because it is so much more than just reaching from a retail banking perspective. That is a whole new infrastructure that can be used across all the segments from a banking perspective, and even go way beyond banking. So I think that new infrastructure, although it's still being put in place as we speak, but I think from an infrastructure perspective, there will be enormous capacity to leverage that infrastructure to offer services and solutions.
Okay, well, unfortunately, we've got to leave it there. Thanks very much to all of you for joining us.